1 hour, we discussed that we are approaching towards the company. First, start with the stock universe. There are two ways to reach. One is to go from the indices, which NSE has already created. Second way is to do the screen. That screener, someone posted that screener free version does not give industry. I'll send to the senior guides. They will forward to you. Now we'll have to go to the individual company. So this is how when you download the file, you will get like this. Control V, and you sort the data of the downloaded data with the filter. You can filter data by various ways, and especially by using. You can download. I'll share this downloaded to the senior guide group. They will forward, and you can sort the data. This is how screener I shown you. Now we'll have to reach to the individual company. Okay. Suppose you selected, you run the screen. I'll again start with this. You can start with the bigger as well. It's a tax from the top company 500. Company which pays tax 500, and now there are 136 companies. Reliance, I shown you. I'll open the Asian Paints. Let's say you want to analyze Asian Paints. Now we are focusing on single company. Click on it. Now you need information, that is data. On screener as well, the information which is available in NSE, it is similarly available here as well. You see the market capitalization and other information. You deselect volume here. Start analyzing here. I'm sure if you watch this live session, you'll be very confident that you can do fundamental analysis because it is a 7 gate subject. You just understand the basic and this is the price chart. When I say it is exaggeration, I don't think it is exaggeration because I have seen the 7th grade children, and just 2 days ago they have beaten me in finals. So first chart is the price. You click on the maximum. Now the price chart is the in a chart. We are going to discuss detailed technical analysis, but most of the finance chart, y-axis is the price, x-axis is the time. So now the chart is available since 2006. Even if number is small, I am reading for. This is Jan 2006. And these are the prices: 500, 1000, 1500, 2000, 2500, 3000. And you will see price is going up and up and up and up. If you select the 10 years or 5 years, now since last 1 or 2 years, maybe last 1 2 years, it is fluctuating sideways. But nevertheless, it has certainly gone up from the March 2019. So this is one criteria in the MPTDS. Price should go up. So MPTDS I'll demonstrate here now. So MPTDS is a market capitalization should be more than 10,000. Here it is 2 lakh 83,122 crores. So market capitalization is valid. Second is price, whether it is going up or not. And then go to the TDS for the tax dividend sales. First, sales will come. This is the sales number since last 10 years, and it should be going upward. See the numbers. By looking at the numbers, you see that it is going upwards. Numbers are increasing. And then dividend and tax. Go to the operating activity, find out the direct taxes, whether it is increasing year on year, then it is valid. And then financing activity for the dividend, whether dividend is increasing year on year. If all parameters are increasing, price, tax, dividends, and sales, then this is good. I demonstrated MPTDS. See, this is you can find good stock in just 2 minutes. So that is good or not. Further analysis we do for fundamental analysis. Click here, find out the financial report, that is annual report. Write down. Annual report is the report sent by the company to shareholders regarding the all business activities of 1 year. That is why annual report. When you try to read this annual report, you will see that 200, 300 pages. Most important is not necessary. Some are just sent for the information. Everything is not necessary for the investor. So what are the things we look into the annual report? So let's go first understand the theory. This is the things. Fundamental analysis is divided into 2 parts. One is called as qualitative analysis, other is quantitative analysis. Qualitative analysis is information about promoter, products, and brand. In words of Warren Buffett, it is the moat, M-O-A-T. Moat is the water structure. In a previous medieval region, there used to be castle, and around which there will be water, you can say reservoir or moat, so that enemy cannot encroach on the building or castle. So this is the moat. So he said this moat should be very wide and deep so that competitor will not encroach to your business. And the branded products like Apple, Microsoft, Coca-Cola, these have wide moat. They have competitive advantage. Asian Paints has a moat or competitive advantage because it's a very efficient company and very old company with established business. But these are the stories. Stories mentioned in form of words. Sometimes stories can be manipulated and stories, words can be picked. But the real truth comes from the data. Numbers don't lie. People can lie. Words can be lies. Numbers don't lie. So always start fundamental analysis with the data first. So some then people are divided into two gangs. One is story based. There is some called as Damodaran or somebody just do the valuation based on the stories. Then there are some people like Warren Buffett. They say only on the data and so on. We are interested in the data driven story because only data may be misleading or future cannot be predicted based on only data. You need a story. For example, Tata, we have the data, all data, business, profitability. There is a story of the data that which is in our mind that Tata is a trusted brand. Tata knows how to do business. Tata do the ethical business and they are socially conscious and they will not cheat to the customers. These are the stories. Data is the number. In case of Reliance, Mutabai Reliance, we know that he knows how to run the business, expand the business. So these are the stories. So data driven story. What is our aim? Is the data driven story. Data should be good, story also good. About Asian Paints, you will start reading the story in the annual report itself. In the data, we try to find out the financial ratio. I have classified them into health ratios, growth ratios, and value growth rates and valuation ratios. How to do it, that we'll discuss. Let's go to the annual report. What are the things you read on the annual report? I suggest that you read at least one annual report for each company. At the beginning, this is one-time job for 3 months. Thereafter, you become expert. Okay. So this is the index. On index, you'll see whatever the activities. So at the glance, then products. What are the products? So I mentioned in the fundamental analysis slide, we learn about products as well. Then industry, you read the chairman analysis, chairman's letter, board of directors. Who are the board of directors? You can find it out. Then go to the down, and this is another point: management discussion analysis. This is good to understand the stories about companies. Okay, what they are speaking about companies, and then there are other things, statutory reports. These are the reports which government wants. Write down what things to read in the annual report. Management discussion analysis, board report, and financial statement in each company. And at the beginning, you can read about the products and the board of directors to understand the promoters. Okay. ESG is not as of now recognized because even if you read for knowledge, that's okay, but these are the necessary. Start with the financial statement. Which one? Consolidated. As I mentioned, there are two statements. Standalone is the parent company statement. Consolidated includes parents as well as their subsidiaries. We focus on consolidated. Click on the consolidated. This is auditor report. You read or don't read, that's okay. See, we should become SWAT. So much information is given, we may get lost. What is important, you may not realize. But what is, if I tell that you read this, that become life will be easy. So this is the information we try to find it out. How to download, I show you. Now let's understand step by step. I expect that up to next Sunday, when you sit to study, you should be very confident in company analysis. So watch the previous video. We'll make few more videos of fundamental analysis because this is your foundation. Once your foundation is strong, then subsequent price analysis, price action, technical analysis, that is all superficial. You will find that there are millions of superficial people who trade in the market based on only price chart, but they don't have strong fundamentals. That's the reason we are spending more time to build the fundamentals. First statement, you will start with so open the annual report, go to the consolidated, start with the profit loss statement. What are the things you see on the profit loss statement? You remember this framework of thinking. Some companies will have little variation, but once your framework is strong, you will not get confused. For example, top line. Top line is revenue. Sometimes some company use the sales, some company use the word sales. It is one and same. It is the top line. Okay. Top line is usually very small, only 2-3 lines, or sometimes single line. Bottom line. So see the top line, go to the bottom line. Profit after tax is the bottom line. Now in new format, Indian accounting standard, this is the word used for the profit after tax. Then you look for the dividend, EPS if it is mentioned, or dividend if it is mentioned. If you have read the annual report yesterday, you might have seen another component here below the profit for the year. So in this case, in this example, I'll just zoom it out. There is something called as other comprehensive income, and then total comprehensive income. So that is not required at this time, at this point of time. Understand this framework first. Top line, bottom line, and rest everything is the middle line. Okay. Middle line is everything is outgo, including tax. So top line is money coming from the customer. Bottom line is the money staying or residual money with the owner. Rest money is going. Suppose customer pays 100 rupees. Most of the company in India, profit after tax is hardly 5, 10, 20, 30. That's it. So at least 70% of the money goes to the some other things or outside, which includes distributor, marketing people, vendors, employee, lenders. So as I mentioned in one of the video, then there are 5 Pandavas and Krishna. So distributor take the shares, then lenders take the interest, then vendor of machine goes to depreciation, another vendors goes for cost material, and government takes asset tax, and whatever the remaining is for the owner. 6 players. They will be at multiple places. So at the top line, then there is expenses. Here, these expenses are the running expenses, which includes cost of the material, consumable, employee salaries, distributors, retailers, commission, and what remains is the operating profit. It is also called as EBITDA. So you might have heard this word in the CNBC, EBITDA. What is this? Earning before interest, dividend, tax, and amortization. This is EBITDA. There is something called as EBITDA margin as well that I'll discuss in the ratios. So operating profit does not include the interest cost. It does not include the depreciation. This is operating profit or EBITDA. And then there comes the interest. Another word for interest is the finance cost. That is interest. It is not principal repayment. This is the sequence in which money goes, and then depreciation is mentioned here, and then it comes as the profit before tax is also earning before tax, and the tax money goes, and what is remain in the hands of owner is profit after tax. This is the sequence. Okay, so there was a Google question in the assignment: how you are going to distribute profit before tax, and majority of people got out, even senior guides, many senior guides, because word was framed in a such way that how are you going to distribute profit before tax? And you see that interest is before calculation of profit before tax. So you can see this is the sequence. Sequence number 1, customer pays money, money goes out. These are the expenses. What remains is the operating profit. Then money goes out is the interest cost. Money goes out. in the form of depreciation. Now you say depreciation does not go out. Even though actual money is not going down, but the value of your machine is reducing. That's the reason it's a depreciation. It is actually capital expenditure. It is expense because its value is going down. So your assets are going down. Third will be tax department. Now then after depreciation and then there will be profit before tax. This will be the number, one number calculation. And from profit before tax, government will take tax. And what remains is the profit after tax. And then profit after tax can be given to the owner as a dividend, can be reinvested, can be done buyback of the shares or repayment of the loan or social service. This is the sequence. Let's go to the actual statement. Now you have to go to in the sequence. It is the sequence. I made life easy. Start with the top line. This is the total income. Okay. Now I'll read. Number is in crores. This is the previous financial year, and this annual report is the last year because this year is not ended. So financial year 23 is the current for this annual report, and the previous is 22. Now here last year total income was 29,481 crores in 2022, 23, 34. Now my question to you, this is the income, it is sales. This entire things comes from the top line. So what is the top line? This is the top. In under top line there are a few more things. One is sales coming from the products. Asian Paints, sales coming from the services. They are doing some services, painting services or some other services, and other operating income. It might be related to some rent or etc. But the main is always from the goods and services. So you can see this is the coming from. So my question to you, take a calculator, and in 2022 the sales or top line was 29, and in 23 it is 34. My question to you, how much is increase in percentage? Sales growth rate. Now you calculate, you will understand. So what you are doing here is the finding out the growth rate. Finding out the sales growth rate. Sales growth means top line growth and posting the answer. How to do it? It's a simple. What is the current value? It is 34, right? What is the first value? Is the 29, right? First value is 29. So this is the this and then bracket 100. Solve this equation and write in the chat box. You are finding the growth rate, sales growth rate. Once you know how to find the sales growth rate, then you find the tax growth rate, profit growth rate, dividend growth. It is the simple equation. कितना आंसर आया भैया? See, investor means calculation. If you don't know calculation, you learn it. If you don't know calculation, you are not. So answer is 17% growth rate. Right? Clear? So what you did here first, you find out the growth rate. Then go to the bottom line. Is there a profit? Certainly there is a profit, and you can find out the profit growth rate. Now this is 41 and last year 30. So 41 minus 30 divide 30. 41 minus 30. Second value minus first value divided by first value. This is the first and then multiply by. How much is the profit growth rate? Here you can see the profit after tax. 36. Okay. Alright. 36% growth rate. So you find that company is making profit and profit is growing. Then go to the again middle lines. This for the understanding. This is the cost of material. 17,000. Cost of material, I said vendors. That means if it is a paste company, it is taking the oil products from other vendors. So on vendors took the 17 rupees. So imagine 34 rupees come from the customer. Now understand the sequential profit cost. Step number, customer gave them. 17 went to the vendors who supplied goods. Then employee 2. Employee cost is 2 here. And other expenses, other marketing expenses, branding expenses. So total expenses were 28. These are the revenue expenses which consumed within 1 year and done to run the business. Now what remains here is the operating profit. The mentioned name is earning before interest, tax, depreciation, and amortization, EBITDA. What is EBITDA here is the 6,646 EBITDA. I mentioned the step. After that, comes the finance cost. Here I said this is lenders. So here you can see vendors, then employee, then lender, and then machines. Machines wale vendors. They took their money. So what remained is the profit before tax. Now here sometime you'll see that before exceptional items. What is this exceptional item? Sometime if there is a some cost of some losses, or there is a fire accident which never happens in a day-to-day practice, but exceptionally cost incurred cost, some litigation, sometimes it is included, and that is for detailed discussion. And then you get the profit before tax. Okay, so 5,688 is the profit before tax. So from that, tax expense is 1,493. Now the tax is calculated on the profit before tax, not the revenue. Okay, this is the top line, and this is the profit before tax. These are the expenses which are allowed as a deduction. So if you are running a hospital, there are certain expenses which you can show as a hospital expense, and thereafter your profit or income calculated. And then corporate tax, there are various tax rate, 25%, 30% depending upon the revenue. So this will be coming into 30% taxes. And there are some adjustment as well. You don't have to go into detailed tax calculation. You just understand that tax, government takes again 1,493 from this number. And what remains is this. How much percentage? That is why I wanted to ask. How much percentage government took from the 56? So 56 was the profit before tax. So government took approximately 15. So it is coming around 3.3, 33% approximately. No, it is, this company is in 30% bracket. So 25% bracket is for the company which has less than 400 crore turnover. So it's approximately 35 or 40. So tax rate will be different for each company, but you got the point that there is something called a tax. Now here is the another point: is tax growing? Last year they paid 1,100 tax. Now it is 1,400 tax growth rate. Let's calculate tax growth. So 14 minus 11 minus 11. Tax growth rate कितना है? फटाफट. You do the calculation. So to understand finance, you have to do the calculation. So find out tax growth rate. Type it. In a tax, there are some current tax, deferred tax. So current tax is you paid in this calculated this year and paid. Deferred tax might be the amount which is paid from the previous years. Okay. So if there is plus number, that means it is going out. But if it is a number is in bracket, it means actually you got the credit. Okay. So here 17 minus 17 crores was the credit actually. So you don't have to go into that detail. You just remember tax paid. This is the sequence from 34 rupees started with the customer. Ultimately, what owners left is 4 rupees. Now find out the profit margin, net profit margin. Now the number here. I am taking a rough number for calculation. 4 rupees remain out of 34. Multiply by 100. How much is the net profit margin? Net profit margin is profit after tax divided by sales multiply by 100. Net profit margin. In a break, you are going to calculate net profit margin on your hospital. Patient paid 100 rupees. How much actually you are taking up? Now, the biggest mistake some doctors make that they don't include your own salary. So you show your own salary. If you do work at some other place, you include as employee cost and find out how much actually the hospital is earning from the investor point of view. And that is net profit margin. Here net profit margin is coming around. What we are discussing here is the how to interpret the data of the profit loss statement. Next is calculate the operating profit margin. Net profit margin is profit after tax divided by sales. Operating profit margin is EBITDA or operating profit margin. Here I'll take 6. I'm doing this easy calculation instead of taking too much. This is not required for understanding. So operating profit margin is 6 rupees is operating profit. 34 rupees is a sale coming from the customer. How much is the operating profit margin? It is 17.6 or something. So, right? So on profit loss statement, what you calculate is the growth rate, sales growth rate, profit growth rate, tax growth rate, even including dividend growth rate, and ratios, all these margins, operating profit margin, net profit margin. Okay, now I'll discuss this comprehensive income because if you want to impress your friends what you have learned, uh, you can ask what is the other comprehensive income of Asian Paints. Okay, only for intellectual gymnastics and academic for the impressing other people. It may not be useful for this stock selection. Now, this profit after tax is actual business. In recently, since last 5 6 years, when Indian account standard developed, and even in GAP in USA, this system is developed, Warren Buffett is very unhappy with this system. What this system is that you have to do the valuation of your assets and mention in this. So some items, some values. So unrealized profit in the asset is mentioned here. This is not actually business. This money has not come in because assets you don't sell it. Or if any unrealized loss, it is mentioned in the other comprehensive income. These details are actually not required. If you have intellectual itching, you can do it, but for beginners, I'm not suggesting it's not required. This is all hypothetical numbers to capture the assets valuations. And final is total comprehensive income for the total comprehensive income includes profit after tax. This number plus this another hypothetical number called as other comprehensive income. And if you add up this, it's a total comprehensive income. These are just theory, not much practical value. Your profit loss statement stop here. So I'm not going to this detail that. Okay, and then further down, profit loss statement will be there are some rows in which profit for the sale attributed to owners of equity. So this is the amount which is attributed to equity owners. That is, this is actually profit, and this is minor non-controlling interest. Means what? There are subsidies, smaller companies, subsidiaries, which are not actually controlling, but still their income will be added here. So smaller companies' income is also into the comprehensive consolidated and this. So total consolidated profit is this 4,900, 4,195. So forget these are just same thing repetition. And last here is this is the important number earning per share. Now here face value of Asian Paint is rupees 1. You may ask why. Initially it might be 10 rupees, then they divided to smaller and it came up to 1 rupees. Even ITC has 1 rupee share. One Zomato has 1 rupee share, face value. Okay. It is not big deal, but you should know what is the face value. Company can split share and make up to 1 rupees, 2 rupees, 3 rupees, whatever it is. Earning per share, there will be, you will see there are two numbers. Basic EPS, basic earning per share. Now, what is earning per share is the profit after tax divided by number of shares. This is EPS. This is very critical number for the valuation. Just talking how much profit is incomplete information. EPS is a complete information because it will tell how much because if there are so many shares, your EPS will go down. So EPS is the number which describes exact profit per share. There are two varieties. One is basic and one is diluted. You take always diluted, ignore the basic. Okay. Now why? Because this number of shares, sometimes it does not include the employees options or some shares which are not explained. So diluted means total shares. Even preference shares are not mentioned. So instead of going into too much technical details, focus only on diluted share, which is a total number of shares. In basic, some shares are excluded from the calculation. And what are those here? This is for intellectual gymnastics, not much practical value. Practical values only diluted EPS. Right? See, too much technical details can cause confusion. How much? How does it matter whether EPS is 42.83 or 42.82? Instead of wasting time to understand small micro. This is for accountant. For investor, we need only few things. So this is profit loss statement. How many of you are confident in reading profit loss statement? Write in the chat. You need to collect the data from the profit loss statement. What is the data you need to collect is this. Now this you will take a printout when I share the PPT. If you cannot forward, you can make your own and print out. This data, 13 points will be useful to do the analysis. Share price. From where you get the share price? National Stock Exchange. That is closing price, LTP, whichever. Number of shares, you find out NSE in the website. Face value, NSE in the website. Revenue, profit loss statement. Operating profit loss statement. Tax, these numbers you will find from the profit loss statement. You collect this data and write in one column here. Because you are serious investor, so you need to do some manual. Everything cannot be outsourced to technology. You collect, write the manual numbers from the NSE, BSC. We'll discuss balance sheet after the break, right now only. And cash flow we find out from the dividend we find from the cash flow statement. So my question to you is profit loss statement is clear. Now I'll opening this 10 minutes for the questions about profit loss statement. And then after break we'll do the balance sheet. Okay. You can post question related to the profit loss statement. 10 seconds to write the questions. There are four statements: profit loss statement, balance sheet, change in equity, and cash flow. Question is which is easy to manipulate? So everything can be manipulated except tax and dividend. Okay, tax can because government get that money. Next is if number of shares increase by using EPS, it will get reduced significantly. Yes. So EPS is depend upon number of shares. So EPS changes with the number of shares. If company sell more share, EPS goes down. If company does buyback, EPS goes up. Okay, obviously it is a ratio, so it will depend upon number of shares. Okay, the question is, as an investor, it is important to see NPM or OPM. So first, NPM is the number one, and secondary, you see the OPM as well. Because why OPM? Sometime in a capital intensive business, there are a lot of depreciation. So net profit might be less, but operating profit will be the good. So you see both. Okay, I always say when I say see both, it means you don't go to the single one. There are so many ratios, 10, 20, out of which I came to the only two. Then from two, you don't go to one. So you look for both. Because I already eliminated unnecessary, and from even if you eliminate and come to one, then it will be oversimplified, over simplification. Einstein said that thing should be made simple, but not over simple. How to calculate PBT? Okay, chalo, let's calculate PBT. Take the pen and paper. This super top. Super top is the where some companies use number of customers for the valuation, talking how big is the company. Now there is a joke. I don't know whether it is true or not. One doctor used to send his war boy to the OPD of other doctor to see how many patients were in his OPD. It's a competitive human tendency. बहुत खुजली होता है. So war boy used to go and see the number of chappal outside the clinic and say that sir बहुत सारे चप्पल हैं. So number of chappal, number of clicks on Zomato, Swiggy, number of customer is a super top. It's used by the valuation by the expert, which is actually not required for. So 130 rupees patient paid. Expenses, running expenses, which includes staff salary, consumable, it went 40 rupees. Calculate the operating profit and tell. So this is 90 rupees, from which you paid the interest. See, understand, principal repayment is not tax free. You have to pay and then tax. Now you may ask, but that money is going outside, that if you buy the machine, sonography machine of 40 lakhs, it is going to become zero in 8 years. To pay 40 lakhs as a principal, if you take entire amount as a loan, then you have to pay tax on it. And if you are in a 25% tax bracket, you have to earn 50 lakhs to pay 24 lakhs as a principal. And on 40 lakhs, you paid interest 20 lakhs rupees over the 8 years. So this interest will be tax free here because it is added before the tax. But 40 will be added here after the tax. So on principle, you pay the tax as well. Now you will start arguing that this is my loss. So this amount is adjusted into the depreciation. So even if you pay tax on the principal amount for the machines, it is factored in the depreciation as well. So it becomes neutral. So what was the calculation? 90 rupees. So interest paid 10 rupees. Depreciation 10 rupees. How much is the profit before tax? 70 rupees. See, if you don't understand when I'm speaking, we will provide you a recording. You watch it again. In fact, my talks are like Bhagavad Gita. If you watch again and again, you will interpret in a different way. Okay. So even after 3 months, when you read the assignment videos, you will interpret in a different way. Okay. Senior guides will tell you that when you watch assignment video again, you will understand few things again. 70 rupees. Suppose now this is profit before tax. You are in a 30% tax bracket. How much tax will you pay on 70 rupees? 21 rupees tax paid. How much remaining after tax? After tax, 49 rupees. Out of 49, you pay principal amount 19 rupees. Loan payment. How much remaining in your hand? 30 rupees. Now, if this is your private limited company, this will be, if it is a very simple business, it is easy to take at will. But if this is a private limited company, and if you want to take this money out, there will be another tax called as this is a dividend, right? When you take out money from the private limited, you have to pay tax again, and if it is again 30%, again 10 rupees will be tax or more than that, and you remain strict. So what I meant to say that if company want to share this 30 rupees with the shareholder also pay only dividend. Dividend tax is now outdated, but personal tax. So dividend is taxable. So it means if this company distribute entire 30 rupees to the shareholder also pays their personal tax, and what remains is 20 rupees. See, these are hypothetical example to understand how this. I presume that you took some loan and this is a principal repayment. Okay, from the profit before tax, you do the principal repayment, you pay the dividend. So if you don't want to pay dividend, you can invest or buy another property in 30 rupees, that is called as. This is the sequence. What I demonstrated as of now is the sequence. Okay. Suppose write down this is the top line is A, this is the B, then here it will be B minus A. Again from here it will be this will be C will be minus, C will be minus, and whatever remains is the this is a D value, and then profit before tax. It means for profit before tax, expense will be minus, interest will be minus depreciation, and then profit before tax. So profit before tax means sales minus expenses minus interest minus depreciation, and then profit before tax. Profit after tax, we will extend this situation: sales minus expense minus interest minus dividend, not dividend, depreciation minus tax. So everything goes out. And what remains is the alright. And the one question is why EBITDA is discussed more than profit. EBITDA and operating profit is discussed more than. The reason I told you, because this depreciation, capital intensive businesses may have more depreciation. So profit after tax may not be the actual real number. This is the real number. Depreciation is the number which reduce your tax, but it is actually your money. So that is EBITDA. And for most of the growth company, sometime profit after tax will be profit uh, before tax will be less because of depreciation. Okay, and EBITDA tells us the efficiency of the business. Suppose there is one doctor person who has his own capital, and Dr. B he has taken the loan. How do we compare the business efficiency of this? If we compare the profit after tax, we really can't compare because B is paying interest, A is not paying. So to compare businesses, we compare the EBITDA. That is a business efficiency. Okay. Why EPS is better measure than the tax? So suppose if I say uh, Doctor A is earning 500 rupees and Doctor B is earning 300 rupees. My question is, who is earning more per patient? Or who is earning more? You may say Doctor A is earning more, but what if he sees 10 patients and Doctor B see only 3 patients? Then who is earning more? Doctor C for 7 hours and this person finished in 2 hours. Then who is earning more? So this is the reason we need some denominator for comparison. Absolute number usually don't tell the whole story. That is the reason we have to have the ratios.